Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to discuss, firstly, how the market, who has been enjoying a pretty good winning streak, it seems to be running out of steam and what is causing it. As well as that, this week is potentially a very big week as we are about to see the battle over interest rates. But before I get into that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, indeed, the market does seem to be running out of steam. And don't forget, at the end of April, or practically the last 9 days of April, we saw one of the greatest comebacks of all time. Because don't forget, come Liberation Day, we all remember Liberation Day, well, then it happened. The S&P was under a lot of pressure. But then on the 9th, of course, Trump gave the market a little bit of hope with the suggestion that he will be delaying tariffs on majority of countries, not including China, for 90 days. And as we discussed many times before in this broadcast, there was much rejoicing. So practically what happened is the S&P practically wiped out all of the losses from Liberation Day. And the fact of the matter is it closed the month out 1.5% above its closing level on April the 2nd when the rot started to set in. And in fact, this was the longest winning streak for the S&P 500 since November 2004. It wasn't just, of course, the S&P 500 who had a good end to April. It was also the Nasdaq and the Dow, both up and both having a very good end of April. And this was really down to the fact that Trump, near the end of the month, of course, started to indicate that he may lower tariffs on China. Because don't forget, the market is gripped at the moment by this currently ongoing trade war between the United States and China. And he even said this. He said, at some point, I'm going to lower them because otherwise you can never do business with them. And they want to do business very much. And don't forget, as well as that, China has said it's open to negotiations. So he has said trade deals are on its way, but then over the weekend, Trump said he had no plans to speak to the Chinese president this week. But he did say he wanted a fair deal. And then he announced on Sunday that he's going to put 100% tariffs on films produced outside of the United States, which is on, there are a lot of big Hollywood productions like Marvel, etc., or the Star Wars franchise, or anything, pretty big, are made outside of the United States. They're made in the likes of the UK at Pinewood, for example, or Australia or New Zealand. And he had this to say. The movie industry in America is dying very fast death. Other countries are offering all sorts of incentives to draw our filmmakers and studios away from the United States. Now, and of course, this obviously had has had a bit of a negative impact on the entertainment industry, and we'll look at that in a minute. But this is the problem, though. This is where I think the market, the happy feeling it was having near the end of last month is run out of steam, mainly because, okay, we get told, but he's going to change his mind and do this with tariffs 1 second, giving us hope. And then the next minute, he doubles down, So, like, one moment, he said he's going to try and relax some tariffs on the automobiles. And then all of a sudden, he comes out with fresh new tariffs on a totally different industry. So the market is now seems to be getting to a certain point where they just don't know what he's going to say one day to the next. So again, this has put more trade concerns. Like I said, deals are about to be done, but he's not about to talk to the Chinese president this week, or no plans to. So again, it looks like we're not even clear or close to a deal between US and China. So this is the thing that we're putting pressure on the market. We just don't know what he's going to say Monday, what he's going to say Tuesday, what he's going to say Wednesday, what's he going to say Thursday, what's he going to say Friday, what's he going to say over the weekend. So this is taking that happy feeling away from the market. And like I say, this has obviously impacted a little bit on the entertainment industry. Netflix and Disney, excuse me, in particular, it's come under slight pressure. They've managed to recover a little bit with the open. But in pre-market, Netflix was down around 4%. But anyway, we're going to have a quick look. Let's have a quick look at the market at the moment, how it's featuring, or how it's doing, so to speak. So let's look at the S&P. Okay, like I said, the market's now been opened for nearly 40 minutes, 37 minutes to be precise. And as you can see, on the day, it's not Black Monday style full, but it is under pressure. It's currently trading around 0.65% negative, opened with a gap again, because again, like I say, this uncertainty is ongoing. Nasdaq as well, very much the same, also under pressure. Again, negative 0.65%. And we can say the same with the Dow today as well, down only 133 points, but down nonetheless, 0.66. If we look at Netflix, again, like I said, it was down nearly 4% in pre-market because of this tariffs, obviously, on foreign produced movies or movies produced outside the United States. And don't forget, Netflix produces a good number of his own films and own TV series, which is going to affect it. The question is whether or not this is obviously going to affect streaming services as well. So again, say currently down, not as bad as it was in pre-market, but negative 2.20%. And Walt Disney, again, same thing. Like I say, Marvel and like the Star Wars franchise, a lot of it is made outside the United States, like in the UK, in Pinewood, Australia, and New Zealand. So obviously, this is affecting them. They've managed to recover from pre-market, but still slightly down, 0.45%. I want to move on to the big story, though, today, which I want to talk about, which is really the big story for the market, really. And that's going to be basically the beginning of a tug of war, okay, over interest rates. Don't forget, this potentially is a really big week this week. We had the Fed interest rate decision on Wednesday. Okay, and here's the thing. Worrying inflation, not that inflation is rising at the moment, but there is obviously expectation of inflation rising with tariffs. Even Trump said himself on the weekend, the first time he ever sort of admitted it in a way. He didn't say inflation directly, but he did say little girls, for example, might not be only have like $3 instead of $30, and those $3 are going to cost more. So even he's sort of like almost admitting inflation is going to start to rise. So obviously the Fed's looking at worrying inflation, slowing potentially economy, and let's face it, a very pushy president. Because don't forget, the market contracted, or not the market, the economy, sorry, contracted for the first time in 3 years in the previous GDP reading. Okay. So this is quite, this is not a positive sign. And obviously, a lot of people are saying the reason for that was, of course, a lot of wholesalers rushed out to buy goods quickly before the tariffs took impact. So this is reason of it. But this is what Powell had to say as well. In the last time, I think he was doing a press conference or doing a speech. He said the strong likelihood that the economy will be moving away from both the Fed's goals for the balance of the year, or at least not making much progress. So basically saying the economy, there's a strong likelihood, is not going to achieve what we're aiming for. Not what we're going to achieve that we're aiming for. And, this is the thing. They don't fit their independent body. But here's the thing, like I say, Trump has been pushing them to cut rates. He wants them to cut rates. He's been extremely vocal about them cutting rates. And this is what he's been saying over the last couple of weeks. First of all, really nice flattering comment. I have a Fed person, i.e. Powell, who's not really good or not really doing a good job. And he also said this more recently. You're not supposed to criticize the Fed. You're supposed to let him do his own thing. But I know more than he does about interest rates. Believe me. Okay. He also went on to say this. There could be a slowing economy, again, emitting again slightly, but these tariffs, it's going to might potentially slow the economy. There could be a slowing economy unless Mr. Too Late, a major loser, lowers interest rates now. So again, let's say they're stuck really in a rock and a hard place. They've got to be independent. So if they're seeing worrying signs on the board, like I say, GDP contracting, okay, they need to be aware and think, hang on a second, we might need to inject some life. And on the plus side, we do have a stable job market because the NFP did indeed come in better than expected on Friday. We covered this on Friday's video. But I'm also saying, I think if we look between the lines, there might be some worrying signs there. So, some data does back that up. But they are also aware that the tariffs haven't really kicked in yet. This ongoing danger of the trade war hasn't taken its hold yet. So they know they might they might have their hands tied and they might not be able to do anything just yet. In fact, the CME Fed tool, okay, they believe that 96.9% chance that the Fed will keep rates the same. They won't act on this Wednesday. They'll keep it the same. So 96.9% the CME Fed tool believes that there'll be no changes in rates. Either way, Wednesday, the interest rate decision and the press conference, more importantly, is potentially going to really be a potential market mover. And then you can also expect to Trump to be very vocal in his opinion if they don't do anything, which again is going to add more, petrol to this ongoing fire. So anyway, let's have a quick, and I'll tell you what we'll do, we went down for a while. Let's have a quick currency update. Yeah, so let's have a quick look on some currencies and give a currency update, because not only the market run out a little bit of steam after that, 9-day winning streak, the dollar has as well. So like I say, the euro still maintains around the 113 level. On a 30-minute chart, it's got a nice, reasonable potential area of support around that 200-day exponential moving average, around 1.1359. The cable pretty much the same as well. Managed to bounce back a little bit. If we look on a daily, on a bigger picture, we can see that, like I say, like the market, the dollar's run out a little bit out of steam today as well. So that, and the same, the dollar yen as well. We can see again, it's running out. The dollar's running out a bit of steam as well. So we can see it's negative against the yen today. Not massively, only 0.78%, but again, still weaker dollar today. And of course, it wouldn't be one of my broadcasts if we didn't look at it. Gold, of course, is benefiting from the weaker greenback today. So that's bounced back as well. Now back above $3,300 level, under that for the last couple of sessions. In fact, it's had quite a big losing streak over the last couple of trading sessions, but not today. All because, again, little glimpses of uncertainty about potential trade deal, and of course the weaker dollar. Currently trading right now $3,314.54. So yes, that's the market at the moment. But like I said, realistically, we have got a big week. Okay, there is some other data, but really it's the Fed interest rate decision and the FOMC press conference happening on Wednesday. That is going to be the big one. We do have Bank of England interest rate decision as well, but compared to the Fed decision and the Fed press conference, realistically, it's small fry compared to that. Don't forget, you can ask me questions anytime at all. It's because, like I say, it's a live show. If you're watching me on YouTube in particular, share with me your, ask me a question or share with me your opinion. Let me know what you think. Are the Fed going to be, active on cut rates, or as anticipated, are they going to, hold the line, keep rates steady? Let me know. As well as that, of course, if you are watching me on YouTube, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. And if you enjoy this sort of content and you put up with me, by all means, give me one of these. It's nice to know that you like what I do. And the same if you're on Twitter/X. Keep whatever the name is it now. If you like this sort of thing, by all means, give us a heart. On another thing, and I notice a lot of people do this, a lot of people go back and watch the recordings, which is great, because I really appreciate the support. I really do. But if you are watching the recordings and it's not a live broadcast, and you have a question or you have a comment or an opinion, which I love opinions. I want people to, share with me their thoughts on the market. Put it in the comment section, okay? I will see it and I will answer that next time I go live on air, which of course will be tomorrow, because we go live every single trading day. Anywho, if there is no questions, not a problem. Not a problem. Leaves me to say then, till next time. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.